Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. There's not a lot of changes we have. So mostly, as we said, market could show a bit deeper action if we will get some external factor. And recently, we've got the news from the Evergrande. It's, some tensions around it. Coupon payment is a bit eased. So investors will come down a bit. Recently, with the statement of the head of the Evergrande Giant concerning the payment, and that provides some relief. So you could see on the gold market has dropped recently significantly, at least on the intraday charts. Here you could see some decrease of demand for the United States dollar on the background of this event. PMI numbers that we've got recently, well, this was a bit weaker than expected, not only in the United States but in Europe and Great Britain, but the changes was not really very significant. It's barely less than expected numbers, and it's hardly could make some significant impact on the market. So what we could do currently on the euro currency? Not a lot of things actually. So despite this upward action that we've got it, and in fact we have kind of the bullish engulfing pattern right now, but you could see that the reversal candle is still valid since market wasn't able to take out the top of this. And since somebody of you probably has tried to take the short position based on this, we need to understand what we could do with these positions, because our stop order that we discussed based on this candle still untouched and position still valid. On a daily chart in general, it makes no significant impact on overall context, just because you can see it stands bearish. It's minor candle, trend still stands bearish, and if market will climb back to the 118, 118.50, it still could be treated as a retracement, since market stands inside of this most recent swing. But on the shorter term, in the intraday charts, there are some things that may help us to manage the position that we have. So first of all, on the 4 time frame chart, you could see that with this upward action, market hits the previous resistance, support resistance natural area, and the one pattern that we could consider here is definitely the reverse head and shoulders, right? So this could be left shoulder, head, and market theoretically should start to form the right arm here, because downside action was relatively strong and straightforward. So you can see significant sell-offs on the slopes of this action, and even right here on the Fed Reserve. So it means that at least some deep retracement should happen. Yes, we have here as divergence. So, the and shoulders itself suggests that this might be some kind of the ABCD pattern to the upside, but this will happen later, so maybe even on the next week. Right now, for us, it is important to get this retracement, because this could let us to close the position that we have, at least at the break-even, or maybe with some positive result. So on the hourly chart, you could see that neckline actually is also confidence resistance around 1750. This market hits right here, and we could consider a few scenarios how we could manage this position as we have currently. We have two fib levels. Depending on where you have taken the position, if you would like to out and close this position, you could watch for the 1725 or 1710 areas. Both of them corresponds to previous lows, as you can see here and here. Let's make some harmony and mirror reflection of the price action to the left, which is typical for the hand shoulders pattern. So if you would like to out, you could consider these two levels, this one or that one, for closing the position. Ultimately, you could decide to not out, because theoretically chance exists that this pattern will fail and market will just start to keep dropping. So in this case, you will have to either move stops to the break-even or somehow tie it closer to manage your position, or just, of course, you could just leave everything as it stands currently with the stops above it and holding this position for some further progress that might show. But the pattern that we see currently that might be formed here, this could be good assistance for those who would like to out, especially before the weekend. Makes sense. And in current situation, I think that it would be better to out, because since we have potentially short-term bullish pattern, maybe it will fail, maybe market will drop lower, but potentially it is bullish pattern. It is forming right on Friday before the week close. So from that standpoint, it would be better to close the position. So if you still keep it, watch for these levels and decide what to do. Currently, at this moment, I do not see a lot of other things that we could do on the euro currency. Let's see how next week will open and what will happen. Particularly speaking, I am actually interested with what will happen in this area. So that's reaction on Evergrande, but we still have the target on 1620 and it hasn't been reached. Market right now stands right near the previous lows. So it is most interesting thing that what will happen with it and what the pattern will be for it. Because as I said, if you remember the butterfly, although we said that chances on the butterfly stands a bit weaker than direct downside action, but still it's existing. Let's keep watching what will happen. So for us, as a major task is to estimate the potential pattern that will be formed here, in what manner market will try to take it out of these lows.